Okay, guys. So let's start with question 1. So this is not the standard format, guys. Usually in the standard format, question 1 will be from the first chapter, that is Introduction to Accounting. Okay, so that will be the question 1. But here they have put accounting equation, not a problem. Okay, so let's start doing. I won't be giving time for you all to try because we have just 2 hours, guys. It's not enough for me to give time and then I explain. That means maybe I will be able to do only like 5 questions today. So I don't want to do that. So what shall we do is let's do together. Okay, if you can do before me, that's really great. But if you feel like no, you have no time to do like that, then you can do with me. Okay, so the first question they are asking you guys, the accounting equation shows the net impact of the above transactions in N business, and they are asking you to find the net impact. So what you have to do, easy, just put the following transactions, whatever transactions they have given, you have to put that and then find out, okay, what is the net impact? What is the net impact? Okay, so let's quickly start. So I will put here assets equals to liability plus equity. Okay, please do before me. Try to do it before me. That would be really great. Guys, if you're done and if you have already got the answer, send the answer to the chat box. Okay, if you're done and if you have already got the answer, send the answer to the chat box and make sure you continue with the next question. Okay, if you're done, continue with the next one. So the first question, it says, okay, 4th March 2019, purchase goods 350,000 from Salia on credit. So guys, you have purchased goods from Salia on credit. Sometimes I might pronounce the names wrong, guys. Please don't mind that. Okay, so what I was about to ask you all is, if they haven't told the word on credit, is it on cash or on credit? You all can even unmute, no worries. If they haven't told the word on credit, have they purchased it on cash or have they purchased it on credit? Think.
On credit.
Why do you say, dear? Why do you say like that?
There is a name mentioned, Sally.
Yes, very good. Guys, always remember, if there is a name mentioned, it's on credit. They don't have to tell you whether it is on credit or not. Even if they don't tell you it's on credit, if they mention a name, you should understand it's on credit. So guys, I just wanted to tell you all that because in your exam, they can do that. Okay, so when you purchase goods, your inventory increases. So go to your assets and put plus the 350 because your inventory is increasing. You're purchasing from Salia. Salia is a creditor. Well, how do I know that? Because when you purchase goods on credit, you create trade payable. So trade payable is a liability. Because of that, your liability also increases. Your liability also increases. Go to the next one. Okay, I won't be going very slowly, guys, because now y'all are going to sit exam within 30 days. So that means y'all are okay with the theory part, right? So I'm assuming most of y'all here, almost everyone here are 2021 A-level students. But if you feel like I'm going too fast, please let me know. I'll try to slow down. Okay? Please let me know. Don't hesitate if you feel like I'm going fast. Return of goods costing 50,000 to Salia. So guys, what is happening after you purchase goods from Salia, you are returning it back. You call it as return outwards. So guys, when you purchase goods, your asset increase. So when you're returning, asset will reduce. When you're returning, your asset reduces. Not only that, before guys, when you purchase goods, your liability increase. Now when it is returned, your liability reduces. If you're done, send me the answer. Okay, when it is returned, the liability reduces because the amount you have to pay to Salia is reducing. Next one, sales of goods costing 200,000 for 280,000 to earlier traders on credit. Again, I will tell you all, even if they don't tell the word credit, credit, you should understand it's on credit. Even if they don't tell you, you should understand it's on credit. How? They have told the person's name. Okay, I have another question for you all. What if they say sales of goods 200,000 for 280 or to earlier traders on cash? Is it still on credit? If they use the word on cash and they have told the name also, is it on credit or cash? I'll repeat the question again. Sales of goods costing 200,000 for 280 to earlier traders on cash. Is it on credit or cash? Then it's cash, right? Because they are specifying you it's on cash. Now don't think, okay, she told that. When they say the name, it's always credit. Guys, if they just say the name, it's credit. But if they specify you it's on cash, then it's on cash. Okay, so guys, let's go to the next one. You have sold goods. When you sell goods, what happens? Your inventory reduces. You have to give up your inventory. So your cost of the inventory reduces. That is 200,000. But you're selling for 280. When you sell for 280, your trade receivable increases by 280. You're selling for 280,000, guys. Your trade receivable will increase. Now, what is happening? You're going to earn a profit. You're going to earn a profit. So your profit will increase equity. Your cost is 200. You're selling for 280. There is a profit of 80,000. Profit increases equity by 80,000. Guys, please remember this, okay? Your income increases equity, profit increases equity, additional capital increases equity. Drawings reduces equity, expenses reduces equity, as well as net loss reduces equity. Don't ever forget that. Okay, so next question. Receiving a discount 3,000 cash paid to Salia amounting to 247,000. So guys, you have received a discount. Discount received, income or expense? Come on guys, you have to quickly unmute and tell me. Discount received, income or
Income.
Income. Discount received is an income. So just now I told you income increases equity. So go to equity and increase it by 3,000 because it's an income. Now guys, you're paying how much? You're paying 247,000. So when you pay 247,000, what happens? Your asset will reduce because when you pay, guys, your cash reduces. So you're paying 247. Because of that, what happens? Your asset also reduces by 247,000. Guys, how much have you settled, Salia? How much have you settled?
150.
250,000. 250. You have settled, Salia, 250. Don't forget this, guys. Settled includes two components. One is the cash and the other one is the discount. One is the cash and the other one is the discount. They are telling, guys, discount is 3,000 and the cash is 247,000. Cash plus discount gives you the settled amount. Okay, important. This is very important. You know that cash plus discount gives you the settled. The settled is 500,000. Sorry, 250. No, 250,000. Okay, so guys, remember, sometimes they will use the word settle, sometimes they will use the word cash paid. Okay, don't assume both are same. Both are totally different. Both are totally different. Cash paid and settled is not the same because, guys, settled will include discount plus cash. So when they use the word settled, understand discount is already included in that. But when they say the word cash paid, you should know that this 247 does not include discount. Do you understand what I'm saying there? So always the trade payable will reduce by the cash amount or the settled amount. Cash or the settled amount?
Settled amount.
Settled amount, because guys, you're totally settling your trade payable. You're totally settling him 250,000. How are you settling him? By receiving 3,000 cash as well as paying 247,000. I think I told it wrong. Okay, I'll repeat it again. You're settling your trade payable by receiving 3,000 discount and paying 247,000 cash. So always the settled amount only should be deducted from the trade payable. If it is trade receivable, even that is also the same. When you're settling your trade receivable, always the settled amount only comes under the trade receivable. See guys, so you need to know this. Anyone who didn't understand? Anyone who didn't understand? So cash, when you pay cash, asset reduces, okay, because you're paying cash. When you receive a discount, equity increases because it is an income. You're totally settling your trade payable by receiving a discount of 3,000, paying cash of 247. Totally you're settling 250. That's why I reduced here 250,000. Now go to the last one. Allowing a discount. Discount allowed. Income or expense? Expense. Discount allowed is an expense. Expense will reduce your equity. So go to equity and reduce 4,000. They are saying, guys, discount allowed is 4,000. Reduce your equity by 4,000. Now, don't forget this. Like I told here, before it was trade payable. Before you were settling your trade payable, okay? It was trade payable. Now we are going to do trade receivable. What happens when you're settling your trade, when your trade receivable is settling us? Okay, so guys, when your trade receivable settles, always remember settles includes two components, cash and discount. Okay, you are allowing a discount of how much? 4,000. Discount allowed is 4,000, and then they are telling allowing a discount of 4,000, cash received from earlier traders is full settlements of its due. Okay, now they are not giving the value. They are telling you to find it. Tell me, how much should Aurelia Limited pay us? Go to the transaction where you sold goods to Aurelia. How much should the Aurelia Limited pay us? Quickly tell me, how much should the Aurelia? 280,000. Aurelia Limited should pay us 280,000. Yes? Did I miss a transaction? Wait. I didn't read the question. I'm sorry. Yes. You're correct. Okay, guys, I didn't read the transaction. Okay, I'll just do that here. Okay, I'll just do that, but I'll just do this transaction. Later, I will explain the question. Okay, I'm sorry. I didn't read the question. They are asking only for 31st March. No, guys. Okay, but let's just do that. Then it will be like an additional knowledge. Okay, see guys, you have to receive from Aurelia Limited 280,000. They are telling you are settling everything. The trade receivable is settling everything. Everything means the 280. Trade receivable is settling 280,000. And if the discount is 4,000, how much did you receive cash? How much did you receive cash?
271.
271.
276.
276. 276, guys, because you're settling how much? You're settling 280. Inside that 4,000 is discount. So the balance is the cash. 276,000. So guys, I told you all before also, when you're settling, always the trade receivable, if it is trade receivable, if it is trade payable, you have to reduce from trade payable. Since it's trade receivable here, you have to reduce from your trade receivable 280,000. Always reduce the settled amount. Always reduce the settled amount. And then you're receiving cash 276,000. So your cash is an asset. Because of that, your asset will increase by 276. 276. So guys, like I was about to do a mistake here, you also can do it in the exam where you don't read the question carefully. Guys, always before you do anything, read the requirement, read what they are trying to ask you. Okay, so here they are only asking you up to 31st March. 31st March will stop here because this is 5th April. That means, guys, you can't include the last transaction. The students who gave the wrong answer for this question is just because you all included the last transaction. Why can't you include the last transaction? Because the last transaction happened in April. But the question was 31st March. If you take the 2018 past paper, all of them, they tested like this. Because the students, when they are in tension, they don't check the question carefully. Even though they know the correct answer, they would take the wrong answer just because they read the question wrong. So what I tell you all, guys, every time when you get an MCQ, first thing you do is just read the heading. Okay, like this. For example, following transactions took place in Nayana's business. And then after that, don't read this. Don't read this. Read the requirement. And then if there are any particular dates given, underline the dates. Because guys, when you underline or circle it or something, you mark it, guys, you don't forget to check that. Okay, because in your exam, guys, you can't think properly because you will be in tension, right? In that case, you should always try to, if you didn't do a particular question, put a big circle with your pen. Keep it like that, because before you finish the exam, then only you will know that, okay, you have missed one question. Okay, or guys, when you see an important date, you take your pen and underline that date so that when you do the question, you will specifically check that date so that you don't do a mistake. So guys, now see, the last transaction you shouldn't take because the requirement is only asking for 31st March. So because of that, we cannot take the last transaction. So the correct answer should be the first one. The correct answer is the first one. The students who got answer as 4 or like that, did you all do a mistake of taking the last one also? We'll see. If you take the last one, how much do you get? Let's see. So 100, yes. Yeah. For the students who got the answer as third one, your mistake was, guys, you all check the last one also. Okay, yes, that's the mistake most of you all might have done. Okay, so the answer is first one. Now let's quickly go to the second question. So don't forget this, okay? Maybe this is the last time someone is teaching you this. So please don't forget, settled includes 2 components, cash and discount. Cash should be, if it is cash received, you should increase your cash. If it is cash paid, you should reduce your cash. If it is discount received, you should increase your equity because it's an income. If it is discount allowed, you should reduce your equity because it's an expense. And always, if it is trade payable you have settled, remove the settled amount from trade payable, that is liability. If it is trade receivable you have settled, remove the amount from assets. Okay, the settled amount. Now let's go to the next one. The accounting equation which shows the net impact of the above transaction in Salia business as at 31st March if he sold goods to Nayana's business, adding 20% profit on the sales value. Okay, so guys, next question they are asking the same this one, see, question 1, 2 and 3. So that means, guys, they are telling in Salia's business what will be the net impact if they sold. Who sells? If the Salia's business sells to Nayana's business, where is that? Is there somewhere? Wait. Salia. Okay, that is the first one. They are telling, guys, the first one, if they are selling on 20%, on the profit, gross profit on the sales value. If you're adding 20% gross profit on the sales value, what is the net impact? What will be the net impact? That's the question. Okay, so shall we try that? Shall we try that? What is the answer you all got? Send me the answers you all got. I'll give you all 1 minute. Be quick. Okay, so this question, I think it's a difficult one for y'all because each one of y'all are sending different answers. Come on, guys, others, I want your answers. If you're done with this, go to the next question. I have sent the tube to the group, the question paper to the group. Okay, so what did you all do, guys? What is the first thing you all did to get this answer? Okay, the students who are confident with your answers, can you all tell me what is the first thing you all did? Okay, now I'm getting correct answers. What is the first thing you all did? Now they are talking only about Salia's business, okay? They are telling if Salia's business, okay, so okay, if Salia's business sold to Nayana's business, 20% adding on profit, okay, on the sales value. They add 20% on the sales value. They are asking what is the net impact in Salia's business. So now before you did in whose business point of view? In Nayana's business point of view. Yes, now you have to do in whose business point of view? In Salia's business point of view. Okay, so guys, first of all, I'll teach you all. There are two types. What are the two ways to calculate profit? What are the two ways to calculate? Come on, guys, you all have to quickly unmute and tell me what are the two ways? How to calculate
Net
profit?
assets.
No, try again. What are the two ways?
Closing net asset minus opening net asset plus drawing minus additional capital.
Yes, I think you all are talking about the equation. I'm asking if a business, they want to determine profit. To determine profit, there are two ways. I mean, to calculate selling price. Some businesses, if I say the answer will itself.
Markup and margin.
Yes, markup and margin. If I explain, the answer itself is coming, guys. It's markup and margin. What y'all told was also correct. Y'all were telling the equation. But guys, my question was, in order to determine profit, businesses can use two methods. You call it as markup and margin. markup and margin. So guys, always remember, if you choose markup, your base is what? What is your base? What do you take as the base?
Cost.
What if it is margin? What is the base you take as?
Sales.
Sales or the selling price. The sales or the selling price. Okay, I'll put here sales. Guys, if you take something as the base, how much? What is the percentage of it?
100%.
100%. Guys, remember, if you take something as your base, that will be 100%. If you take something as your base, the basis will be which percentage? 100%. So when it comes to markup, your base is what? Your base is cost. So your cost will be 100%. When it comes to margin, your base is sales. So your sales will be 100%. Okay, so know this, guys, know this. So then, guys, if they tell you, now in this question, they are specifically telling they are adding gross profit on sales value, markup or margin? On sales value, margin. They are using margin. Okay, on sales value, no, guys. So that is margin. So that means you should understand the sales is 100%. So you know, guys, sales minus cost of sales gives you the gross profit. Sales minus cost of sales will give you the gross profit. Now you know, if it is margin, sales is 100%. If it is margin, sales is 100%. Guys, if sales is 100% and they say you the gross profit is 20%, what is the percentage of cost of sales?
80.
80, because sales minus cost of sales gives you profit. Sales minus cost of sales will give you profit. So that means your cost of sales will be 80. Guys, percentages, to identify percentage in accounting is very important. Not only markup, margin, if you go to EPF, ETF, there are many places, guys. Even if you go to the cash discount, all these places, you need to know percentages, how to determine. So that's important. Actually, that is easy also. So guys, see here, how much are you selling? How much is Salia selling to Nayana? They are selling, if you see the first one, guys, if we are purchasing, Salia is selling. So Salia is selling for 350, right? If we are purchasing, that means, guys, Salia is selling. So the Salia is selling for 350. That's her price. That's her selling price. If she's selling for 350 and you know 350 is 100%, then guys, how much is 80%? How to calculate that? Easy. Yes, 350. Afka, 350 is the cost for whom? It is the cost for Nayana's business. But for Salia's business, it's the selling price, right? Understood. So guys, 350, if you divide by 100, you will get, guys, you will get for 1%. And then if you multiply by 80, you get for 80%. How much is the cost?
280.
280. So guys, your cost of sales will be 280,000. 280. So because of that, your profit is going to be how much? The profit is 70,000. Profit is 70,000. Okay, are you all clear with that? Now see the next one. So first of all, let's do. Now always think in the perspective of Salia. Okay, don't think in the perspective of Nayana, because guys, now they specifically ask you what is the net impact on Salia's business. So that means now you should think your Salia. You're selling goods to Nayana, you're selling goods and the selling price is 350. Guys, for Salia, Nayana is who? For Salia, Nayana is who? Sorry? Debtor. Trade receivable. Yes, it's for Salia, Nayana is a trade receivable because they have sold goods on credit. So they have sold how much? They have sold for 350. So your assets increase by 350 because that is the selling price. You have sold goods for 350. Because of that, your asset will increase by 350. And what is the cost of the goods? The cost of the goods is 280. Because of that, your inventory decreases by 280. Your inventory decreases by 280. You will get confused if you think on Nayana's point of view. They are telling guys now your Salia. So you should think on Salia's point of view. So then guys, your inventory will reduce by 280, which will give you a profit of 70,000. Because of that, your equity increases by 70. Which will give you a profit of 70,000. Because of that, your equity increases by 70. So guys, now your Salia, okay? So then just check all the transactions which happened with Salia, because don't check this is Nayana's business. No. So now your Salia means you should only check the transactions which happened with Salia and Nayana. Okay. So then if you go to 10th March, return of goods costing 50,000 to Salia. That is return outwards for Nayana. But for Salia, what is it?
Return inwards.
Return
inwards. For Nayana, it is return outwards, guys. But for Salia, it will be return inwards. It will be return inwards. So tell me guys, now you are returning and the selling price of the good is 50,000. So guys, when you return, the selling price is 50 means your trade receivable reduces by 50. Your trade receivable reduces by 50 because for Salia, Nayana is a trade receivable. So trade receivable reduces by 50. Don't forget, when there is a return inwards, what happens to inventory?
increase.
Increases. Your inventory increases because guys, when you are having a return inwards, that means Nayana is coming and giving the goods back. Nayana is coming and giving the goods back. Because of that, your inventory increases. But be careful, this is the selling price. 50,000 is the selling price. Now you have to find, okay, how much is the cost of it? Guys, really a good question. The second question is really a good question. Okay, and it's a different type of question. So please listen carefully. So guys, your return inwards selling price is 50. Now you know 50 is 100%. 50 is 100%. Can't you find 80%? 50 divided by 100 multiplied by 80, you get 80%. So how much is that? 40,000. 40,000. So the profit is going to be 50,000. Profit is 10,000. Now see guys, your trade receivable reduces by 50. But what happens now? You're getting the inventory back. Because you're getting the inventory back, the cost of the inventory increases, which will increase your asset. Okay, so it will increase your asset, but don't forget, now it's a return inwards. Before you recorded the profit, now you should record it's a reduction in profit. Your profit will reduce, guys, because it's a return inwards. When you sold, you increased your profit by increasing your equity. But now what's happening? Now it's being returned. Because it's being returned, you should reverse it, which will decrease your profit. You can't say it's a loss, guys. You say reduction in profit. Because you increased the profit before, now you have to reduce it back. You have to reduce it back. Okay, so guys, let's quickly record it now. So we are done with that. What else is with Salia business? Go and check the 28th March. 28th March, receiving a discount of 3,000 and cash paid to Salia amounting to 247,000. Guys, if you are Salia's business, can someone change this sentence to Salia's business? Anyone who can change this sentence, unmute and tell me. In terms of Salia's business. Now, this is in terms of Nayana's business, no? Anyone? Guys, don't hesitate. Just unmute and tell. It's okay. Yes, Muzna. We can't hear you if you're speaking, dear.
Receive 1,000 from Salia.
Yeah, receive 247.
Cash received from Salia amounting to 247,000, allowing 3,000 discount.
Very good, very good. So guys, now it was discount received. It will become discount allowed. Discount allowed of 3,000. Before it was cash paid. Now you're Salia, so it's cash received. Cash received. So you're receiving cash from. You're receiving. Salia is receiving cash 247,000. Because of that, your asset increases by 247. Okay, and there is a discount allowed because now you're Salia, not Nayana. For Nayana, it's discount received. For Salia, it's discount allowed, guys. So it's a expense equity reduces. Nayana is totally settling how much? Nayana is totally settling 250,000. Guys, for you, Nayana is a trade receivable or trade payable?
Trade receivable.
Trade receivable, because you sold goods to Nayana. Nayana is a trade receivable, guys. Because of that, your asset reduces by the settled amount. Trade receivable, no, guys. So your asset will reduce by the settled amount. You have totally settled 250,000. So your cash increases by 247 because you are receiving cash. And when you give a discount, expense will increase, which will reduce your equity. You're settling totally 250, which will reduce your assets. Now get the answer. Answer is fourth one. Guys, a good question. If you all understood this, that means it's really good. Okay. Answer is fourth one. Answer is fourth one. Now go to the next one. Go to the next one. Owing to the above transaction, the increase in the balance of debtor control account and creditor control account of Nayana's business. Okay, now they are going back to whom? They are going back to Nayana. Now they are telling, guys, owing to the above transactions, what is the increase in debtor control and creditor control? Can someone tell me what does increase in means? What does increase in means? What are they trying to specify by the word increasing?
Change.
Yeah, change in what and what? There should be a change in something and something, right?
Opening and closing.
Yes, guys, compared to the opening, by how much have the closing increased? Guys, when they just say the word increase, they are talking about, okay, compared to the opening balance, by how much have the closing balance increased? So I think it's a newly started business. They haven't given opening balances. So you have to assume, okay, by how much have it increased? How much have it changed? By how much have it changed? Okay, so can you all quickly find the answer and send me? I will give you all 1 minute. Be quick. What's the answer you all got? Okay, good job, Azra, Devni, Aisha, Lafir, Shabnam, Muzna, Rehana. Good job, Amra, Faris. I might miss your names, guys. I'm sorry. Yusra, correct. Guys, be careful. It is 31st March, okay? They are only asking about 31st March. Please don't forget, don't take the last one. Don't take the last one because that is next year. They are specifically asking only up to 31st March. You can do a mistake there. Be careful. Send me the answers. The ones who are done, go to the next question. Don't just wait. Guys, these days you all should always keep on doing questions, okay? I always tell this to my students, but there are many external students here, so I just want to share with y'all also. Guys, please always be doing questions. No use of studying theory once again and again, okay? No matter you study theory, if you can't attempt a question, that means it's useless, okay? Amana Lamha, correct answer. So please make sure all these days, guys, at least minimum you should be done with 5 years past paper, minimum. Before you go to the final exam, at least you have to be done with 5 years past papers, all 3 subjects. Okay, so now let's say you have 30 days more. You have 30 days. So 10 days for each subject. If you keep 10 days for each subject, okay. So those 10 days each, if one day if you do part 1, the other day if you do part 2, still you can finish 5 years past papers for the students who haven't tried at all. Okay, if you are a student who haven't tried any past paper, still you have a chance to do them. Okay, don't keep on just studying theory. Why? Because guys, you don't know to attempt a paper. No matter you study theory, it's useless. It's useless. Okay, so make sure you are able to do paper. You might be scared, guys, at first to try a paper just because you haven't done all these days. But once you start doing, you will get used to it and you will feel like, okay, now I can do it. I can do it. Okay, so if you take each subject, always, guys, keep the last 5 days or the last 7 days, keep it free. Keep it free. Don't put any timetable for that day. Now, don't tell, then are you telling us not to study the last 7 days? No, guys, I'm telling you all, keep that last 7 days free. Try to put a timetable where you finish studying and doing papers before the last 7 days, because you don't know what can happen, right? You don't know what can happen. So you should be ready 1 week before the exam. You should be ready. So make sure you keep the last 7 days free. And then, guys, in the last 7 days, you can do revision. You can just go through the theory chapters and do just once in a while, just do questions. Okay. So before those last 7 days, you should be done with past papers and everything. You should be ready. Okay, so the last 7 days you can relax and do slow. You can relax and go revise it, guys. It's really good when you have those 7 days where you feel like, okay, I'm done with everything. All I have to do is relax, calm myself, and just do a revision of all what I have studied. Okay, if you can be like that, that's really great. For that, guys, you should work hard now. Don't put a timetable. I'm telling again and again, don't put it for the last 7 days. Try to finish it before last 7 days. Okay, so that last 7 days, you can do any part which you couldn't do, or maybe anything which is difficult for you, you can revise it. Yes, Afka, correct. So guys, what I'm telling is each subject you have 10 days, right? Each subject you have 10 days. If you still haven't started doing past papers properly, what you can do for part 1, you can keep 5 days where you do the paper and then you revise every part of the paper. Doing the paper is not enough. Doing the paper is not enough. You should understand your mistakes and you should be able to feel like, okay, now hereafter I will not do this again. Okay, that's how you should do. Doing paper is not enough if you don't understand where you went wrong. Okay, so that's why I'm telling, if for part 1 day you will only take 2 hours, right? Part 1, the maximum time you can take is 2 hours. So out of 24 hours, if you take only 2 hours, you have the balance remaining hours, right? What should you do? You have to check your answers one by one and try to understand where you went wrong and try to make sure that you don't do the same mistake once again. Clear? That's how you should do. Yes, Sarah, correct answer. So let's go to the question. Okay, owing to the above, what is the increasing debtor control and creditor control? So guys, if I go to the first question, I think I can find from there itself. Only I will just choose the debtor and creditor. Okay, so now see, who is debtor for Nayana's business? Now we are coming back to Nayana. You should think in the point of view of Nayana, because they said only Nayana. No. So guys, when it comes to Nayana, Salia is a trade payable. Salia is a trade payable, while Aralia is a trade receivable. Okay, trade receivable. So guys, the first transaction is where you sell goods on credit to Salia. So that is the first one. And then after that, the second one, there is a return outward. So that is also related to creditor. No? And then the last one, okay, that is 28th March, you're settling your trade payable. So all this is related to Salia. Why am I marking with the red color? Is what if there is a bank loan? You can't just take the liability column, right? What if in another question they give a bank loan? Then you should understand, you should take it out, because we should only find the trade payable. So guys, yes, then what is the change? The liability, what is the change? The trade payable has increased by 50,000. Your trade payable has increased by 50. How did I get that? 350 minus 50 minus 250. That's how I got. Now go to trade receivable. Okay, so trade payable is increasing by how much? By 50. Now go to what? Now go to trade receivable. So who is the trade receivable? Aralia Limited. So you are selling goods for 280. Okay, this is trade receivable. And then what else is happening with Aralia? Is that all? Is that all? That's it, right? Because guys, after that, if you see, 5th April only, it is related to Aralia. But 5th April, they are asking only up to 31st. They are asking only up to 31st. So you can't take 5th April. You can't take 5th April because they are asking only up to 31st. So guys, this will be the answer. Whatever I have marked in red color, so that will be the answer. So debtor control will increase by 280,000. 280. While your liability, the trade payable, creditor control, it will increase by 50,000. Answer is fifth one. Answer is fifth. How I got 50,000? Just add this 3 and you will get 50,000. You will get 50,000. So guys, answer is fifth one. Answer is fifth one. Be careful in the liability. If they give you bank loan, you should make sure you should take it out, because that's not relevant for trade payable. Trade payable. Okay, so yes, got the answer. You all can quickly go to the next one and send me the answer, guys. Don't just wait. Send me the answer for the next one. Okay, so this is trade payable. And this is trade receivable. Send me the answer for the next one once you're done. The thing is, why I was trying to change the time today is most of them, they said they are going to business studies. There is a paper class happening right now. That's why I wanted to change, guys. But then I thought if I keep on changing, it will never happen. So I just thought, okay, let's keep it today. There will be at least some students can attend, and we'll try to change it next week. But I don't know which time to keep, because obviously at least there will be 1 or 2 students saying I have a class at that time. Fourth one, Jeevana, correct answer. Aisha, Lafir, Amra, Faris, Devni, Muzna, Amana, correct answer. Good job. Afra, Akbar, and Hafsa. Please check again. Office equipment in which had been purchased on credit for use in business destroyed by the fire. Okay, like relevant double entry for the above event. Guys, it's an easy one. You all might think too much and try to send a different answer. Be careful. Okay, I'll give you all a clue because I know some of you all are making a mistake here. Office equipment is non-current asset. It is not a trading good. It is a non-current asset. So there you can't. Okay, just send me the answer later. I will explain. Okay, Shara, Trisa, correct answer. Good job. Others, if I don't tell your name, it's wrong. Okay, Afka, Aisha, Banu, correct answer. Yusra, Shabnam, correct answer. Others, try again. Others, quickly. Lamha, correct answer. Mariam, correct answer. Nazifa, Zahil, correct answer. Good job. Shifna, correct answer. Ilma Hafil, correct answer. Guys, see here, what is happening is you have purchased office equipment on credit. Now you know what some students did. They got confused in the word credit. They thought, okay, it's on credit. That means there is something related to credit. This is where you went wrong. Okay. Yes. Okay. When you purchase office equipment on credit, can someone tell me what's the double entry? Okay, that's not the question. I'm just asking. When you purchase office equipment on credit, what is the double entry? What is the double entry? Rimaza, correct.
Office equipment debit, creditor credit.
And see, you're making that mistake. That's why I asked y'all. Office equipment is a non-current asset. Guys, when do you create creditor? When do you create creditor? What is the situation?
Non-current.
Office equipment debit, capital account credit.
No. I'm asking when you purchase office equipment on credit. Okay, my first question is, when do you create creditor? Answer that first of all. When do you create creditor? Because this mistake you can't do in the exam. When do you create creditor?
When purchasing current assets.
Purchasing, specify. Purchasing what?
Current assets on credit.
No, you can't say current asset, no? Yes.
Purchasing trading goods on credit.
Yes, trading goods, guys. You can't just say current asset. There are so many current assets. There are trade receivables. All these are current assets. You should specify. Guys, when you create trade payable, when you purchase trade goods on credit. Purchase of trade goods. What is trade goods? Trade goods is your main purpose goods. Okay, main purpose. If you are a stationery business, for you trade good is stationery. Okay, if you are a book selling business, for you trade good is books. Now guys, is office equipment a trade good? No, purchase of office equipment. Okay, so I should put here on credit. If not, you will misunderstand. Okay, guys, remember, only when you purchase trade goods on credit, you create trade payable or creditor. When you purchase non-current asset on credit, you don't create trade payable or creditor. Guys, we call that, purchase trade goods on credit, you create trade payable. When you purchase non-current asset on credit, you create non-current asset supplier. It's a liability, I understand, but it's not a trade payable. My next question is, what if they have told you your office equipment trading business? What is the situation then? Is it a trade payable or a non-current asset supplier? If they have told you your office equipment trading business.
Trade payable.
Trade payable. So can you memorize this? You can't memorize, guys. You should understand here. You should first of all see what type of business are you. Sometimes they don't tell. If they don't tell, then you should understand, okay, office equipment usually is a non-current asset. Office equipment generally is a non-current asset. But what if they specify you your office equipment trading business? That means, guys, you're trading good this office equipment. You're buying and selling laptops. You're buying and selling computers. In that case, these computers and laptops are your trading good. These are your trading good. So then, guys, yes, you create trade payable. But if you're a normal business, your office equipment is a non-current asset. You don't create trade payable there. Please don't do this mistake. Okay, I hope you all are clear. If anyone didn't understand, ask me. Now see, you're purchasing office equipment on credit. So office equipment is a non-current asset. So you will debit your office equipment, okay, and then you will credit your office equipment supplier. This is not the question, I'm just telling here. Office equipment supplier, you will credit. Okay, this is where you purchase office equipment on credit. Now they are telling the office equipment which you purchased on credit, it was destroyed. So some of y'all were trying to include the creditor. Y'all were giving me answers where they have include creditor. Guys, is the creditor involved here? If you destroyed, if your office equipment was destroyed by the fire, can you go and tell your supplier, listen, my office equipment was destroyed, because of that I will not pay you? Can you tell him like that? Can you tell?
No.
No, you can't. So office equipment supplier cannot be involved when there is a destruction. Because the destruction is our fault, guys. How can it be the fault of the office equipment supplier? You get what I'm saying? So, guys, if y'all were thinking, okay, the creditor will be affected, you can't do that. So, guys, see here, it was destroyed by the fire before office equipment was a non-current asset. Now it is destroyed. A non-current asset is destroyed. Can you keep it as an asset anymore? Can you keep it as an asset anymore? After it, you can't. You should take it out. You cannot keep it as an asset anymore, guys. What you have to do, you have to take it out. Usually, office equipment is an asset. So you have to take it out from your assets. To take it out, you will credit your asset. To take it out, you have to credit your asset. Guys, what is it now? After you take it out from your assets, what should you record it as? What should you record it as?
Destroyed office equipment.
Can you specify? I'm trying to ask, what should you record from after you take it from the asset? Yes, Ruzaika, you should record it as an expense. It is no more an asset for you. It is no more an asset for you. So what you do, you take it out from your asset and record it as an expense. You can say destroyed office equipment. Destroyed office equipment. It's an expense. Why? Before, guys, it was an asset for you, but now you cannot use it anymore. So you have to record this as an expense. You have to record this as an expense. So the answer is second one. Answer is second one. Understand, your supplier is not involved when there is a fire. It is something, a problem related to business, not the supplier. Answer is second one. Quickly do the fifth question and send me the answer. Keep on doing, guys. Don't just wait. If you are done, continue. Devni, you have to try again. Fifth one. Lamha Yusra, correct answer. Good job. Amana, correct answer. Fifth one. Okay, we see Amana, correct. Muzna, Amrafari, Shabnam, Akila, correct answer. If I don't say your name, your answer is wrong, okay? Jivana, correct answer. And Jumana, correct answer. Trisa, correct answer. Guys, once you are done with the fifth one, try the sixth one. So what are they telling here? When they say the marked price, are they telling the selling price or the cost here? Is this 280 selling price or the cost? They are trying to say, guys, it's the list price, the marked price. That means if you go to the shop, there is a price which is marked, right? So that's the list price, right? Aisha Banu, correct. Hafsa, correct. Hana, correct. Devni, correct. Nazifa, try again. Aisha Banu, correct. Rimaza, correct answer. Zainab, Aisha, correct. Shara, correct. Okay, let's see. Niam 3, correct answer. Good job. Ilma Hafil, correct. Fifth one. Zahil, try again, Zahil. So they are saying, guys, there is a price which is marked on an inventory. The price marked on an inventory, they didn't say here markup. Okay, now don't confuse with the word marked and don't think, this is markup. Markup means, okay, this is cost. I know some of you all thought that. They are telling the price marked on the inventory is 280. Yes, Nazifa, correct. So the price which is marked on the inventory is how much? 280,000. That means the list price is 280,000. 280,000. And then they are telling it has been sold after allowing 5% trade discount. Guys, 5% trade discount. Should is there a double entry for trade discount? Is there a double entry for trade discount in accounting? No, there is no double entry. All you have to do is from the list price, you will deduct the 5% trade discount. You have to directly deduct from the list price 5% trade discount and try to get, guys, now 5% of it is how much? Can someone tell me?
14,000.
14,000. So guys, after you deduct 5%, the answer you get, what is that value called? I'm not asking the value, I'm asking what do you call that? What do you call that?
Invoice price.
Okay, another word?
Mark price.
Listed price.
No, this is the listed price. No, I have wrote here listed price. Guys, that is, now say you're selling or buying, you're selling. You're selling. So if you're selling, what is the 266,000? What is that? Here's the sales value. Guys, always remember, after you deduct the trade discount only, you get the correct sales value. Okay, so you might have studied this in the chapter 4. Okay, you don't take trade discount. Only after you deduct the trade discount, you get the sales value. From the list price, you have to deduct trade discount to get the sales. Why didn't I say the purchase value? Because they are telling they sold, guys. If they sold, it's not the purchase. No, it's the sales value. Okay, after a week. So what is the question? The question is the amount to be recorded in customer's personal account as sales return. After a week, this customer had returned inventory amounting to 30,000. Okay, so they have returned inventory. Out of this, 30,000 worth of inventory was returned. Now the question is, okay, the amount to be recorded as return. How much should you record as return? Should you record 30,000 as return? Oh, guys, remember they are telling this list price is 30. The return goods list price is 30,000. So, guys, is that the actual returned amount? If the list price is 30,000, my question is that the actual returned amount? Because they are specifically saying it is the mark price, that is the list price. So that is not the returned amount. Because, guys, always sales, always return inwards. You should record it after the trade discount. How do I know they haven't deducted the trade discount? Because in the bracket, they specifically put that it's the marked price, that is the list price. Marked price means the list price. So that means they haven't deducted the trade discount, which is 5%. 5% trade discount, is it 1,500? Okay.
Yes.
Yes, 1,500. Then, guys, how much is the sales return correct value? Your sales return correct value is 28,500. It is 28,500. This is the sales return or the return inwards correct value, 28,500. How do I know this 30,000 is not yet deducted? The trade discount is not yet deducted. How do I know that? Because they told the word marked price. Marked price. So that means it's not yet deducted. That's how I found out. Clear? So, guys, the answer is 28,500. It is going to be the first one. First one. Now go to question 6. How many of y'all here are 2022 students? Can y'all please raise your hand? How many of y'all here are 2022? Can y'all please raise your hand? Okay, 4 students. 5. Good. Okay, try question 6 now. I think it's bank reconciliation question. It's a bank reconciliation question. I'll give you 3 minutes. Be quick, because in your final exam, the maximum time you can take in an MCQ is how much, guys? What is the maximum time you can take in an MCQ? You all should know that 2.4 minutes. The maximum time for an MCQ is 2.4 minutes. That means you should also practice to finish it in that time, okay? 2.4. Muzna, correct answer. Amana, Hafsa, correct answer. If you all got the answer, send it. Jumana correct, Akila correct. Yusra, Devni, Amra Faris, Lamha, correct. Hana, check again, dear. Others, I'm waiting till you send the answers. Trisa, correct answer. Mishal, try again. Yusra, correct answer. Okay, let's see what's the question so I can quickly draw the formats and keep. Mariam Mubarak, correct. According to the above, which one of the following reason that had been used in preparing bank reconciliation statement for the month of Jan was? Zainab, correct answer. Sarah, check again. Okay, let's see. The cash control account. I'll quickly draw, guys, the cash, adjusted cash control. If you are done with this question, try the next one. The paper is there in the group. Adjusted cash control. And then here, the bank reconciliation. I don't know whether they're asking this. I mean, whether we need this or not. I'm just quickly drawing and keeping. If we need, it will be easy, no? Okay. The cash control account balance was had a favorable balance, and the overdraft balance of the bank statement of L traders as at 31st were respectively. When they say, guys, they are trying to say, okay, the cash control had a balance, positive balance 5,300, while your bank statement had a overdraft balance. When there is an overdraft balance, how do you show it in the bank reconciliation? How do you show? How do you show an overdraft balance, guys? In brackets, you have to show negative in brackets. Overdraft means, guys, a negative balance which you will show in brackets. So that is going to be 32,100. 32,100. Okay, guys, in your friends, there might be students who have financial difficult, where they are finding difficult to go classes. If you have friends who didn't go classes, you can just tell them to join these free sessions. Okay, it will be helpful for them. Okay, at least it will be a guidance at the last point, right? So please make sure you share with them so that they also can join in the future. Okay, so when is your exam starting? February? When? February 7th. Okay, when is accounting? When is accounting part 2? Okay, 23rd and 26th. So we can do, no? We can do up to that time. We'll see. If you all are willing to join, I can try my best to do. But if you all feel like, no, we need to study alone from February, then I will stop. Okay? Okay. Okay, so fine. So guys, if it is a bank overdraft balance, then you have to show it as negative. You have to show it as negative 32,100. In preparing the adjusted cash control and the for the month of Jan, the standing order payment was 23,100 has been only recorded as an omission in the cash control. Okay, so they have seen that there is an omission of standing order. Yeah, 23,100. 23,100. Now they are asking you, according to the above, which one of the following reasons that had been used in preparing bank reconciliation for the month? Okay, so guys, can we quickly find out? Let's take a closing balance. Let's take the closing. They are telling only the bank reconciliation, the reason for the difference. Okay, let's take the closing balance and see how much do we get. Which side is bigger, debit or credit side? Which side is bigger? Debit side or credit side, guys?
Credit.
Credit. The credit side is bigger. Then what is the first thing that should come to your head if the credit side is bigger? What is the first thing that should come to your head, guys? It's an overdraft.
Overdraft.
Yes, very good. It's an overdraft balance. If there is a credit side balance, guys, the first thing that should come to your head is it's an overdraft balance. Okay, it's a negative balance. The problem is, if even though it's a negative balance, the bank statement balance gives you 32,100 negative. But the adjusted cash control account balance gives you only 17,800 negative. Overdraft, no guys, negative. How do I get that? From here, I took it here. You will ask me, okay, why did I put as minus? Because guys, usually cash control is a debit balance. But if it comes in the credit side, it means it's an overdraft. It means it's an overdraft. So they are asking, what would be the reason for an overdraft balance? What would be the reason for the overdraft balance? Now, both are overdraft, okay? The problem is both are different. Even though both are having an overdraft balance, the problem is, guys, both are having different values. So they are asking you what would be the reason for the difference between those overdraft balances. For that, what you have to do is, you have to put the answer they have given, you have to put one by one and check what would be the correct reason. You have to put one by one and check. Okay, so question number 6. Okay, now see, first one, an issued check 28,600 has not been. Guys, when it comes to these questions, it takes a bit more time. You know why? All these 5 answers, you have to put one by one and check what is the reason. No, so it might take a bit of time. So you should try to do very quickly. So there is an issued check 28,500 and it has not yet been presented for payment. Then that would be unpresented check. Okay, so unpresented check. Let's put this unpresented check add or minus. Unpresented check add or minus. Add. Okay, let's add it and see. Let's add it and see 28,600. Are we getting this answer? Are we getting this answer? Let's see. We should get 32,100. Okay, let's see whether we are getting. Are we getting, guys? No, we are getting a positive value of 10,800. So that cannot be the answer. That cannot be the answer. So I will cut it. I will cut it. Now go to the next one. An issued check 14,300 had been debited in another account holder's account in error by the bank. Is it an error done by the bank or the business? Error done by the bank or business?
Business.
Bank.
Read. You can't make a mistake there. They have specifically told you. Still you all are making mistake. Guys, they are telling you it's an error done by the bank. If there is an it? In the cash control or in the reconciliation statement? Yes, in the, yes, tell. The bank reconciliation, guys. If there is a, yes, if there is an error done by the bank, you should correct it. You should show it in the bank reconciliation. Actually, you don't correct it. You show it in the bank reconciliation. So let's show it error. Now, guys, when it comes to any reconciliations, it can be trade payable, trade receivable, any reconciliation statements you have studied. All these, guys, you don't correct the mistake, you will show the mistake. Whatever mistakes they have done, you will also show it. You don't correct it, okay? Don't forget that. That means if they have overstated something, you will also overstate because you're showing the mistake. If they have understated something, you will also understate it. Why? Because you don't correct reconciliations, you show the mistake to the managers. You will show them, okay, these are the reasons for the difference. This is the reasons. These are the mistakes they did. That's why it caused the difference. Now see, an issued check 14,300 had been debited in another account holder's account in error by the bank. Guys, if they have debited, for us, what is it? Bank has debited. Then for us, what is it? Always remember, it's the opposite. Guys, if the bank has debited, that means for us, it's credit. For us, it's credit. Guys, if it is credit, will it reduce our value or will it increase our value? No, wait. Now they are telling an issued check 14,300 had been debited in another account holder. They should actually debit us, but they went and debited in someone else. Now, guys, if they debit, that means for us it's credit. They should actually reduce from our account. But have they reduced? They should actually reduce it, guys. But have they reduced? No, they didn't. They did a mistake by reducing someone else's account. So, guys, because of this, tell me, is our balance overstated or understated? Think and answer. Overstated or understated?
Overstated.
Overstated because there is an issued check. When there is an issued check, our balance should reduce, but they by mistakenly reduce someone else's balance. Because of that, our value is overstated. If our balance is overstated, tell me, should you show it as a plus or a minus? Don't forget, you show the mistake in reconciliation, you don't correct it. You should show it as a plus. Very good. Guys, you should show it as a plus because you have overstated. Since you have overstated, you will also overstate. You will also overstate because you're not correcting the mistake. You are showing the mistake. Since you're showing the mistake, you will also overstate it. Is the answer correct? No, you should get 32,100, guys. Your answer is still wrong. Your answer is still wrong. Guys, you should be able to correctly identify errors. You should be able to identify whether you should add or deduct. Remember, reconciliation statements, you don't correct the mistake, you show the mistake. That means whatever mistake done, you will also show it. Okay? Okay? Yes, Nazifa, you should just show how the error has occurred. They have overstated our accounts. Because they have overstated, you will also overstate it and show it. You will also overstate it and show it. So that is also not the correct answer. That is also not the correct answer. Now go to the third one. A deposited check, 32,300 on 30th Jan had been credited by the bank on 2nd Feb. Tell me guys, what do you call this check? What do you call this check?
Unrealized check.
Very good. Guys, see, you have deposited on 30th Jan, but it is only credited by the bank on February 2nd. That means when it comes to January, business have already recorded, but the bank haven't recorded yet. We call this unrealized check. Deposited check, not yet realized, is what you call as unrealized check, because it is being realized only in February. That means in January, it's still an unrealized check. Unrealized check, add or deduct?
Deduct.
Deduct. So go and deduct 14,300. Okay, now tell me guys, are you getting the same value?
Yes. Yes.
Okay, let's see whether you're getting. Yes, you're getting 32,100. Guys, you're getting 32,100. So that means that's the correct answer. That is the correct answer. So that's why I told you when it comes to these questions, you have to do one by one and check which is giving you the correct answer. You can't immediately get the answer, guys. You have to check one by one to see which will give you the correct answer. So the answer is third one. But let's do the fourth and fifth one, okay? Just for understanding purpose. Let's do that and see. A deposited check 14,300 had been dishonored by the bank. Deposited, dishonored. Which side should you record? What do you call this? Yeah, deposited check dishonored. Which side do you record? And where do you record? Guys, when you deposit a check, your cash control is debited. When it is dishonored, your cash control should be credited. So guys, when there is a check deposited and dishonored, what happens? Your cash control becomes credit. Your cash control becomes credit. I'll say here, dishonored check. Remember, when you deposit, cash control is debit. It's an omission, guys. Usually dishonored checks, after you receive the bank statement only, you will see, okay, there is a dishonored check. So guys, or it is always omitted. So you will wait till you receive the bank statement to record it, and you will record it in the adjusted cash control. So there is a dishonored check of 14,300. Let's see whether you're getting the answer. Okay. But still you're getting the answer, right? Wait a minute. Guys, are you all getting the answer? Just check and tell me. But I think they told you only the bank reconciliation, no? Yeah. Guys, if they haven't told you like this, now see guys, they are saying according to the above, which one of the following are the reasons that had been used in preparing bank reconciliation? Now this dishonored check is bank reconciliation or adjusted cash control? It is adjusted. Yes, it is adjusted cash control. Even though you get the same value for this, still you can't get this as the answer because they specifically told you it's only bank reconciliation statement. They told you guys the reason should be only bank reconciliation. But dishonored check is what? Dishonored check is adjusted cash control. Because of that, you cannot take that. Even though you get the same value, you cannot take that as a reason just because they specifically told you it's only bank reconciliation statement. Now go to the last one. An issued check 14,300 has not been presented to the bank payment. What do you call this? What do you call this?
Unpresented checks.
Unpresented check, add or deduct?
Add.
14,300. Are we getting the answer? Let's see. No, right? We are not getting the answer. So the answer is wrong. So guys, the most accurate answer is the third one. Third one is the correct answer. Okay. So far. So guys, you might get confused. You might even think fourth one is also the correct answer, but you should read the question carefully. The question is specifically telling only when preparing bank reconciliation. But dishonored check comes to adjusted cash control. That's why we can't say that is the answer. So the correct answer is third one. Go to the next question and send me the answers quickly. Okay, let's see. Question number 7. Hafsa, can you check again? Other than that, others, all of you all have sent me the correct answer. Ania, check again. Other than that, all of you all have sent the correct answer, okay? The ones who I told, please check again. Others, good job. The advance received on next year sales agreement amounting to 100,000 had been credited to this year's sales account. This can be known as what type of error? First of all, tell me, next year, what do you call that? Next year sales, what do you call that? What do you call that? Next year sales. What is the term you use? Sales in advance, right? It's an advance sales. Okay. So guys, if it is an advance sales, what is it? Asset, liability, income, or expense?
Liability.
Liability. What is the correct double entry when you receive money for the next year? What is the correct double entry? You receive money. What happens to cash?
Increases.
Increases. Debit side, 100,000. And then where do you credit?
Liability.
Yes, the sales in advance. It's a liability, guys. You have to credit your sales in advance account. It's a liability. Okay, you will credit. It's a current liability. But what have they done? This is the wrong one. This is the wrong one. What have they done? Instead of recording it as a sales in advance, can someone tell me how did they record it? Tell me the double entry, how they have recorded.
Cash debit, sales
Cash
credit.
debit, sales credit. Sales income credit.
Yes, the sales income credit. When you just say sales, guys, it's the income we are talking about. Okay. So this is how they recorded. Now, guys, is there any problem with the cash? Is the cash correct or wrong?
Correct.
Correct. So the only problem here, okay, the only problem here is the sales in advance and the sales account. So guys, sales account is credited, which is wrong. To correct it, what should I do? What should I do?
Debit sales.
Sales account debit. Debit your sales because it's wrong, guys. They have credited it. To correct it, what you should do, you have to debit your sales. Okay, and then guys, you record the correct entry. What's the correct entry? Sales in advance should be credit. That is the correct entry. So first of all, you should compare and see which, if there is anything correct. Your cash has no problem. You can cut cash off because cash is correct. The problem is sales is credited, which is wrong. So to cancel it, you will debit your sales. And then you should record the correct one. The correct one is sales in advance credit. Now that is not the question actually. They are asking, what is this error? What do you call this error? Guys, sales in advance is a liability. But sales is income. Income. Okay, now let's go, guys. Wait a minute. I'll quickly go to the... Wait a minute. So, correction of errors here. See, guys, error of principle. What does error of principle means? Error of principle means the transaction is recorded in the correct side. Now let's see whether it's recorded in the correct side. Yes, see, both are correct sides. Both are credit side. Okay, the side has no problem. The side is correct. Okay, so the correct side, transaction being recorded in the correct side, that is the credit side. Credit side. So that has no problem. The correct value, okay, the value is also correct. Even that is correct, right? Everything we recorded 100,000. But the problem is the class is wrong. Wrong class. Guys, why the class is wrong? See, it should be recorded, okay? Should be recorded as what? As a liability. The class should be a liability. But what did they do? They recorded as a income. They recorded as an income. So what happens, guys? The class is wrong. The class is wrong. Not only that, even your account is wrong. What is the account which is wrong? The account is wrong is, the correct account should be, guys, sales account. Okay, the correct account should be the sales account, but sorry, the correct account should be the sales in advance account, but they went and recorded where? They went and recorded in the sales account. They recorded in the wrong account. Okay, should be recorded in where? In sales in advance. Okay, they should be recorded in the sales in advance account, but they have recorded in the sales account. The sales account. Okay, so I see here, because of this, we can come to a conclusion. It is an error of principle. Because of that, we can come to a conclusion, guys. This is an error of principle. Why? Because the side is correct, the value is correct, the class and the account is wrong. The class and the account is wrong. Because of that, we can come to a conclusion. It is an error of principle. It is an error of principle. So the correct answer should be second one. The correct answer is second one. Most of you all got it correct. Good job. So guys, now we have to go to question 8. Can you all send me the answer? Question 8. Send me the answer. Question 8. Let's see. So far, all of you all have sent the correct answer. No. Wait. Salika's check again. Lamha, check again. Hajar, Zainab, check again. Others, correct answer. Guys, don't just come to a conclusion. Read all the answers. Before you come to a conclusion, make sure you read all the answers. If you're done with the 8th one, try the 9th one and 10th one. Hajar, you have to check again. Others, correct answer. Zainab, check again. Sara, check again. Fatima, Zahra, check again. Afra, Akbar, Nazifa, check again. They are asking the incorrect one. They are not asking the correct one. Yeah, Shara, check again. Yes, Zainab, that's correct. Zahil and Hajar, you have to check. Jeevana, correct answer. Zahra, correct answer. Okay, let's read it. Yes, Lamha. Let's read it. I'm sorry, I didn't check the last few answers. Okay. Which of the following is incorrect? The first mistake you might do in this question is think the question they're asking is correct. They're asking incorrect, guys. The statement of financial position is formed on the base of accounting equation of asset equals equity plus liability. Yes, guys. Now, because of entity concept, if you have joined my recent accounting concept class free session, there was a free session. If you have joined, you might remember. So, guys, this basic accounting equation is also arise due to this entity concept. Because, guys, anything related to the capital, entity concept only says you should take honors separately. That's why we have this capital. So that is also correct. The business maintains ledger accounts and prepares profit dollar statement and SOFP considering the business owner is an outside person. Yes, guys, when you prepare SOFP, SOPL, you can't include anything related to the owner. You cannot include owner bringing money inside the business. You cannot record as income. Owner taking money for his personal use, you can't record as an expense. So when you're preparing statement of profit dollars, statement of financial position, you should always consider entity concept, where you should always take owner as an outsider. Okay, drawing or income tax payment for the owner are charged from the owner by sole proprietors or partnership business. So guys, when there is a drawings or income tax, which are now there is drawings or income tax for the owner, guys, we can't take it as our expense. We can't take it as our expense. It is something related to the owner, guys. We cannot take it as if it is our own expense, because entity concept says owner and business are two different people. Income tax which you pay for the owner is not relevant for the business. No, it's something relevant for the owner. Okay. Next one, the business owner's personal assets and liabilities are not to be seen in the statement of financial position. Now, guys, if the owner has a house, personal house, you can't record it as a business building. Okay, because entity concept says owner and the business are two different people. The last one, the business is accepted as an independent legal entity in front of law. My question for you all is, why did you choose answer as fifth one? There should be a reason for you to tell the answer is fifth one. Can someone tell me the logic behind the answer not being the fifth one? I mean, the incorrect answer is the fifth one. Why? No, Ambra. Why? Why do you think this is not the correct answer? No, I'm not getting the, I still, no one told me the proper explanation. Why? Why do you say? Yes, wait, I think, Mishal, yes, Mishal is trying to come to the answer, guys. And even Ikra. Yes, Salika. Not Salika, Amra Faris. Guys, listen carefully. This entity concept is for any business. It can be a sole trader, it can be a partnership, it can be a company, it can be any business, guys. For any business, this entity concept is there. Now, if you take a sole trader and a partnership, they also have to follow entity concept. But it doesn't mean they are legal entities. You might have studied in business studies, guys. These sole traders and partnerships are not legal entities. But still, they have to follow entity concept. They still have to follow entity concept. Because of that, that is not the correct answer. Entity concept does not see which type of business you are. It is applicable for all the type of business. You can be a legal entity, you can be not a legal entity such as sole trader partnerships. Okay, but still you have to follow entity concept. Okay, so that is wrong. That statement is wrong. Answer is fifth one. Okay, last one for the day. Ninth one. Tell me the answer. The last question for the day. Tell me the answer. What did you get it? Allowance for expected loss. What is the concepts behind allowance for expected loss? That's easy. Yes. Guys, allowance for expected loss is where now you know in the future you have a doubt on some trade receivables. Because you have a doubt on some trade receivables, you know in the future that they will become bankrupt. Maybe you have a doubt. So that there is a concept called Prudence Concept, which says if you know that in the future you're going to have an expense due to a current transaction. Okay, due to a current transaction, if you know in the future you will have an expense, Prudence Concept says don't wait till the future. Record it now. Okay, so guys, the Prudence Concept will be the answer. Prudence Concept. So there are two answers, actually, three. Okay, now you have to find another one which is relevant for this. So what is the other one, guys? The other one is matching. Matching. Why did you choose matching concept? Why did you all choose matching concept? What is the reason? You can't just choose it. What is the reason? So, because allowance for expected loss is an expense, how can you tell it as the, how can you tell, guys, that is the matching concept? Okay, you all are saying income should be matched with expenses. Okay, this expected loss is an expense. What is the income for that? Now, it should be matched with the income. Now, what is the income for that? Very good. Sales. Guys, because you made a credit sales only, you have allowance. You have to incur this expense. Because you sold goods on credit to the trade receivables, only you have doubt on them. You have a doubt on them whether they will pay or not. So matching concept says always income should match with the expense. So your income is the sales income. For this sales income, when you make a credit sales, you might have doubt on your customers who might not pay you the money. So that's why we come to a conclusion. This is a matching concept. So the answer is fourth one. Prudence and matching concept. Answer is fourth one. So guys, I hope you all are clear with all what I explained today. So next class, let's continue with question number 10. That's it for the day. Guys, take care. Study well. Bye-bye. Welcome.